evening, everyone. I'm Kathy Tam. I'm the Director of Professional Programs and Education at the Ontario Pharmacists Association. Welcome to this OPA webinar brought to you by Scotiabank Healthcare and Professional Banking. Before we get started, I'd like to do a land acknowledgement. I'm speaking to you from Toronto. We acknowledge the land we are meeting on is the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat people, and is now home to many diverse First Nations, Inuit, and Métis peoples. We also acknowledge that Toronto is covered by Treaty 13 with the Mississaugas of the Credit. Just a reminder of some housekeeping items. If you need some technical assistance, please use the chat box to message me. I think I'll show up as OPA in the chat box or host. And if you have any questions for the speakers, please feel free to put them in the Q&A box. Please use the Q&A box and not the chat feature, as the questions can get lost in the chat. Before I introduce our speakers, I'd want to do a quick plug for a webinar that you might be interested in. This Thursday, we're hosting a webinar called Pharmacy at Risk: How to Safeguard Your Business from Common Threats. It is an insurance-related webinar, so if you're interested in pharmacy ownership, today's topic, you could be interested in this webinar as well. I will put the link in the chat later after I stop speaking, so if you're interested, you can register for that webinar for this Thursday. Welcome. Today's webinar, Own Your Future, Your Path to Pharmacy Ownership, is brought to you by Scotiabank Healthcare and Professional Banking. Thank you to them for their support. They have had over 30 years of experience advising and providing customized financial solutions to healthcare professionals, including pharmacists, with a team of healthcare advisors and specialists who provide advice and solutions, including pharmacy financing. Healthcare and Professional Banking can support you whether you're a pharmacy student, a practicing pharmacist, or a retired professional. And I welcome today's panelists to this webinar. Mina Youssef is with Titleist Law Group, LLP. He's motivated by strong interest in justice and advocacy. Mina pursued his legal education in the UK, earning an honors Bachelor of Law degree. He launched his own law practice where he has spent over 7 years focusing on residential and commercial real estate, corporate and business law, and pharmacy transactions. Robert Grunwald is a partner with Zeifmans LLP. Robert joined Zeifmans in 2006 and became a partner in January 2016. He specializes in accounting for owner-managed businesses, personal and corporate taxation, and estate planning. Robert has cultivated an in-depth knowledge and expertise in the healthcare industry, including a focus on pharmacies. And Riaz Naqvi is a professional banker and mutual funds representative at Scotiabank. With 21 years of experience in financial services, Riaz specializes in supporting healthcare professionals with tailored banking solutions. He takes pride in building strong relationships and providing advice that helps clients grow their practices and achieve their financial goals. Collaborative by nature, Riaz works closely with partners to offer a full range of business banking services. He's passionate about staying current with industry trends and is committed to delivering value through every client interaction. Welcome, everybody. Thank you for joining us tonight. Just to let everybody know, we have a number of questions that we prepared for the panelists, but as I mentioned off the top, if you have any questions, please feel free to use the Q&A feature and we'll answer them closer to the end of the webinar. So my first question is, basically just tell us a little bit about yourself. What is your role? And I'll go through each of you. What are your individual roles to a pharmacist who may be considering owning a pharmacy? And how does one build this team of professionals? So why don't I start with you, Riaz? What is your role as an advisor at Scotiabank?
Thank you, Kathy, and good evening to everyone. Like you just said, my passion is to deal with professionals, and that's what my title says as well. I'm a professional banker. I have been helping the professional clients. My specialty lately is in the pharmacy segment, where I have helped many pharmacists to establish or start their own pharmacies or buying into an existing pharmacies. That's what I have been helping my clients in. I arrange financing for like startups, for acquisitions, for buying into the shares of an existing pharmacies. So all these kinds of financing needs, we help our clients. And we hold their hands. Let's say I have many startup pharmacies when we finance them for their first pharmacy, and now they own multiple pharmacies, right? And I'm their banker. So I have held their hands for over the years, and they have grown with us. So that's my basic role.
Thanks, Riaz. And Robert, what is your role as an accountant, and how do you work with pharmacists?
Pardon me. Good evening, everyone. Thank you for the opportunity. We kind of call it cradle to grave. So we're starting out, when someone, even their parents may be pharmacists, and starting with them as students and going through the whole process of through schooling, through to advising on best way to even pay for those kind of things, set up those kind of things, through to graduating, coming, working as a pharmacist into ownership, into starting a family, and then transitioning from their to their estate plan. And we look at corporations, personal taxes, advising, consulting on how things should be structured for the best, most tax efficient, and as well as the most best for on a business level as well. So as we call it, cradle to grave, and there at every step of the way to assist and advise.
Thank you. And Mina, what about you? You're on mute.
My apologies, Kathy. That's a fantastic question, and thank you for having us today. Honestly, I believe that the team you build before buying a pharmacy is just as important as the pharmacy you choose to buy. As a lawyer, my role is to protect your legal interests at every stage of the ownership journey. That includes structuring your corporation, reviewing and negotiating your lease, drafting or reviewing your purchase and sale agreement, helping with licenses and regulatory compliance, and making sure you understand your obligations. I do not work in a vacuum, however. I'm one part of a triangle alongside your accountant and your banker. Your accountant ensures that financial structure is tax efficient and sustainable. Your banker helps you secure the right financing based on the structure that we've put in place. My recommendation, if you ask me, how do you build this good team on your side? You start early. Even if ownership is a year or two away, it's never too early to begin the conversation. And to work with professionals who actually understand the pharmacy space, the risks, the regulations, and the specific financial realities. Just as a quick note, I mentioned this to Kathy as well. I want to mention that while I can't provide specific legal advice today, I'm more than happy to offer any attendees a free 30-minute consultation after the webinar to talk more specifically about your own situation and how to get started in the right way.
Thank you, Mina. And with that, why don't we continue this conversation? Because one of the things that often comes up in terms of starting a practice and starting a pharmacy is when to incorporate. So let's start there. Like, when would someone incorporate, and what are the benefits of incorporation?
Yeah, absolutely. Usually it's the first legal step in your pharmacy ownership journey. From a legal perspective, incorporation means creating a separate legal entity, a corporation that is distinct from you personally. This new entity will own and operate the pharmacy, enter into contracts, take on debt, and employ staff. Now, when should you incorporate, Mina? That's a good question. Ideally, before you sign any binding agreements, including a letter of intent, offer to purchase, lease, or loan documents. Why, you ask? Because these contracts, especially in asset purchases, need to be in the name of the corporation that will operate the business. If you sign as an individual and trying to assign the deal later, you may trigger some sort of assignment clause that requires consents or even create tax complications. This is especially important in asset deals, which are more common for first-time pharmacy buyers. In an asset deal, your corporation buys the business assets, inventory, equipment, goodwill, and the lease, but not the actual legal entity that owns them. That's why your corporation needs to be in place before the deal is signed. By contrast, in a share purchase, you're buying the corporation itself, including the assets, the liability, and the regulatory history as well. Share deals are typically more complex and may be used when the seller wants to preserve licenses, relationships, or tax treatment. Another thing you can consider with a share purchase would be an amalgamation, where your new corporation and the seller's company merge into one entity on closing. This can offer some legal and tax efficiencies, but it's highly technical and would definitely need to be carefully planned by your lawyer and your CPA. If I had to summarize the benefits of incorporating, it would be limited liability, tax planning. So incorporation may offer certain tax advantages, such as access to small business deductions or planning opportunities around income and capital gains. These benefits will vary, though, depending on your structure. So it is important to consult with a qualified CPA to tailor the right approach to you. And lastly, for financing alignment, while incorporation isn't always required by lenders, it is often preferred, particularly for clarity and protection. Having your corporation in place ensures the same legal entity signing the loan agreement, the lease, and the purchase contract are all the same, which helps avoid confusion and protects you from personal liability. You also begin laying a strong legal foundation early, including a minute book, share structure, and shareholder agreement if you're purchasing with a partner. So to summarize, incorporation is not just a formality, it is a legal, tax, and operational tool that should be in place early, especially if you're pursuing an asset acquisition. It sets the stage for everything that follows thereafter.
Thank you. That was a good summary. Are there any other, outside of the corporation aspect, are there other legal considerations that pharmacists need to consider?
Yes, absolutely. There are quite a few legal considerations to be mindful of as a pharmacy owner. These go well beyond simply signing on the dotted line. So I'll break them down for you. So one would obviously be licensing and regulatory compliance. So ensuring that your pharmacy is registered with the OCP, designating a pharmacist in charge, ensuring your premises meets physical and record-keeping standards, and notifying the college in advance of any change of ownership or corporate structure. Another legal consideration are your commercial leases. This is really important for us lawyers as well. Pharmacy leases, we typically want to see at least 10 years or longer. And the terms of that lease can make or break your business down the line. Some common legal pitfalls, specifically with regards to commercial leases, would be demolition clauses that allow the landlord to terminate your lease early if they redevelop, non-exclusivity, and assignment and sublease restrictions. So an experienced lawyer can negotiate terms that better protect your investment and match your long-term business plan. Another legal consideration are your purchase and sale agreements. Whether you're buying assets or shares, the purchase agreement is the legal blueprint for the transaction. One more legal consideration to take into account would be employment law. Given that pharmacies often have long staff, when you do acquire an existing business, you move entitlements like vacation, pharmacy-centered health information custodians under Ontario Personal Health and Infect Privacy Officer, maintain secure systems for storing.
Oh, there was something, Mina.
Oh.
When you started talking about the sales agreement, you kind of cut out in and out there. Oh, and I don't think we can hear you now either.
Okay, I can just speak back.
Oh,
Can you hear me?
no.
Hello?
Yes, now we can hear you.
Is
Uh,
still can't hear me?
Yeah, it's cutting in and
Okay,
out.
great. So I cut out around purchase sale agreements.
Yes, and now I think we can hear you clearly.
Let me just try something here. Hopefully that'll better. Okay, excellent. Yeah, I think Kathy, you mentioned I kind of cut off at purchase and sale agreements there. Okay,
Yes.
so the purchase agreement is your legal blueprint for the transaction. So key provisions to take into consideration are representations and warranties, assumed liabilities, regulatory approvals, and transition support, which is very important. If these terms are vague or overlooked, you could inherit unexpected obligations or find yourself with no legal recourse if issues do arise. Two other quick legal considerations to take into account would be employment law. Pharmacies do often have longstanding staff. When you acquire an existing business, you may also be acquiring those employment relationships. So you want to ensure that proper employment contracts are in place and that the statutory entitlements like vacation and overtime pay are being tracked properly. One final consideration would be privacy compliance. Pharmacies are considered health information custodians under Ontario's Personal Health Information Protection Act. That means you must have a privacy officer, which is usually the designated manager. You must maintain secure systems for storing, accessing, and transferring personal health information. Your staff must be regularly trained on confidentiality and access protocols, and you must have written privacy and data breach policies. Failure to comply with this can result in fines, reputational damage, and loss of trust from patients and regulators. As you can see, pharmacy ownership touches on multiple areas of law: corporate, real estate, employment, privacy, and health regulation. These areas all intersect at critical points, which is why it's essential to have a lawyer involved from the very beginning, ideally from the letter of intent all the way through to closing and post-closing support. Legal advice at the right time does not just protect you, but it helps make you more informed with respect to your business decisions and structuring your deal properly to avoid costly mistakes.
Thanks, Mina. That was very helpful.
Yeah.
You mentioned earlier, and so I'm going to go to Robert in terms of the tax implications. So Robert, what tax information should someone review before buying a pharmacy? What are some considerations and what are some common mistakes that people are just not aware of?
For sure. So I was actually going to say you chose the right guy for the job because Mina basically took all my answers. But I mean, starting point, just to kind of couple that with the incorporation, one of the things on a sort of on a consulting level, less on the tax level, is that incorporating gives a level of structure, level of organizational, procedure as well. Since it's a separate entity, everything is encompassed within it rather than multiple businesses or things going on. So it's very good for record keeping, cleaner set of books and cleaner records. In terms of tax level, as Mina mentioned, tax rates generally are lower in a corporation, which allows you to save more, save more of your money pay less tax, save more principal for reinvestment or other types of investments. As well, discussing kind of buying a pharmacy, assets versus share purchase. These are all things that have huge tax advantages or tax tax effects that you want to make sure are structured correctly. So in some cases, it may be more worthwhile to purchase shares versus assets. Other times, not as advantageous as well. When you're selling a pharmacy, there's something to definitely keep in mind. So on an organizational level and a tax level, the incorporating usually has your tax rates are lower, leaving you with more in your bank after paying your taxes, and it gives you a much better, more flexibility as well on how you can draw your income depending on your personal tax credits and personal taxes, which ways you want to draw. So definitely gives you a lot of flexibility and much more advantageous from a tax level.
Great, thank you. Next question's probably for Riaz, but any of you who have some considerations can kind of jump in. But what are the most important financial considerations for someone thinking about opening a pharmacy? And what does the bank look for and what in terms of this process, in terms of things to consider when someone is kind of thinking about financial support?
Yeah, so thank you, Kathy, for this. First of all, planning and the preparation is the key for any kind of transaction, whether you're starting up a new pharmacy or you're acquiring or thinking to acquire an existing pharmacy. Having a team of specialists is definitely very helpful. And then in terms of the financing, when it comes down to the to the start of pharmacy or acquisition of a pharmacy, the documentations, they are very similar with the slight changes. For example, for a startup pharmacy, typically we would require a business plan, a well thought of business plan, which is an actual document you are going to rely on, especially in your first couple of years. And you should be very much involved in developing that business plan for your new startup. And along with that, you will also want to incorporate the financial projections with the help of your advisor or tax advisor. And that is the actual data you think how you're going to generate the business and what will be the potential expenses for next couple of years, and what are the requirements for your cash flow. So business plan, having a business plan, having a financial projections is a must for a startup pharmacy when it comes down to the financing, securing the financing with any bank. I would also say you have to be prepared whether you are going to incorporate this business or you are going to borrow the funds under your sole proprietorship. So there are different pros and cons, which a good lawyer can advise you on that piece. Along with that, another important document which as a banker we look at is the lease agreement. You have to find a place where you think you see yourself running a business. Few things when we look at the lease agreements are that the term of the lease plus the renewal option should be equal or greater than the amortization you're requesting from the bank. Typically, our amortizations are anywhere from, the banks offer 10 to 12 years amortization when it comes down to the leasehold improvement term loans or the equipment term loans. So lease is also a third document which is very important, and that should be definitely reviewed by a lawyer. So definitely for either whether it is a startup business or an acquisition or you're buying into the shares of an existing pharmacy, having a team of professionals is a key to your success. Now, when it comes down to the acquisition of an existing pharmacy, a couple of additional documents which we'll always require is the historical vendors' financial statements for at least 2 to 3 years. I recommend if we can even add a 4th year to see the history of the pharmacy, how it has been doing for last few years. And you have to review the information, and you have to complete your due diligence prior to coming to us. I recommend especially going through the financials with your accountant, see specifically what the historical expenses are for these pharmacies. Is there any opportunity for you when you are taking over this pharmacy? What kind of changes you are going to incorporate, whether there's an opportunity to reduce the expenses, or you have to see how many staff members you are going to retain, or any changes you are going to make in any structures. So with that, we will definitely, with the historical financial statements for last 3 to 4 years, minimum we will require 2 years though. We would also recommend that you provide us the normalized financial statements with detailed notes. For example, if you are anticipating making any changes in the expenses going forward, you have to advise us. For example, if you're making changes to the salaries, like if the existing vendor was paying himself a management fee or a dividend amount, are you gonna draw those amounts as a management fee, or are you going to pay yourself a salary, right? So we have to make sure, like, you provide us all this information, and then we can make a decision based on the historical plus the normalized financial statements. Most of the time, the banks do require the financial projections with acquisitions as well. That is your opportunity to tell us after you acquire the pharmacy, the changes you are going to make, and then going forward, how do you see this pharmacy in next couple of years? So, these informations are very important. Other than your personal information, we would require. Typically, the banks do require unlimited personal guarantees, so you should be prepared to provide us the personal guarantees. Along with, of course, there will be a GSA required on the corporation you are going to register. And then when it comes down to different types of loans, banks do offer open loans and fixed rate loans. Typically, the open loans offer ability to make prepayments ahead of time or prepay a loan and any loan amount without any penalties. And then on the fixed rate times, it may lower your payment, but then you cannot make any prepayments. So there are different types of terms available. Fixed term rates could range from 1 year to 5 years. Typically, the variable loan option has a 3-year term, which will be renewed automatically after the term has expired. And then the banks do also finance your inventory through a revolving credit line. So you have to be vigilant, or you have to know what kind of inventory levels you are going to maintain in case of an existing acquisition. And then the credit line limit should be sufficient to support to purchase the inventory and your cash flow requirements going forward. You don't want to be in a position that you have used all of your inventory. You have purchased the inventory by utilizing the entire limit on your credit line, and then you have no room left for your cash flow purposes. I also recommend, whether it's a startup or an acquisition, you have to have some funds set aside in case you need them, other than securing the financing. So these are the three things we look at: a business plan, financial projections, lease agreements, and then in terms of the existing pharmacy acquisitions, we look at the historical financial statements of the vendor, and then the normalized numbers and the projections as well. And also, we check if there is any vendor take back. In certain cases, there is a vendor take back that the existing vendor is willing to extend some grace period to you, but in that case, it is very important to see, and we have to know the terms and conditions of the vendor take back agreements, whether there is any repayment required, is there any interest being charged by the vendors or not, things like that. And again, all these documents should be reviewed by their lawyer as well, and also with the accountant, to see if the cash flow, the business cash flow, will allow having a vendor take back or not.
Thanks, Riaz. A lot of information needs to be provided, a lot of preparation, as you kind of point out, and the importance of having a team to help support that.
Definitely.
How long does this process normally take in terms of the review and securing the loan? Because you said, the banks look at all of this. So there's obviously time required to prepare all this information, but also the step itself in terms of the bank turnaround.
Yeah, it depends. Let's say from the time we have all the required documentation, from that day onward, we can pretty much close anywhere between 4 to 6 weeks time. Now, for the startups, the financing could take up to 6 months or even longer in certain cases, because especially in a case where you have let's say a vacant unit, right? A shell unit, you have to do the construction and leasehold work that could extend the period of the improvement work, and all that could be potentially 6 months to a year. Normally, our loans are, once we fund our loans, we are good for the next 6 months or so. So we have to plan accordingly. But for acquisitions, we can pretty much close that transaction within 4 to 6 weeks time.
Mm-hmm.
Yeah.
Thank you. Let's go back to Robert for a second. You touched on this a little bit in terms of, but maybe you can elaborate a little bit more, and maybe talk a little bit more detail in terms of what kind of tax strategies should pharmacists take advantage of, especially when it comes to managing both your personal and your business finances. Like, how should things be structured from a tax perspective if you start your own pharmacy versus being an associate or an employee?
Well, so every situation is different, and everyone's tax profile is different. Comes down to, them, their families, and that kind of idea. There are many different kind of strategies that can be put into place. More recently, we've been seeing family trusts that are used for these kind of strategies. Keeping in mind there is a 51% pharmacist ownership, so there are certain ways to have that structure in place. But family trusts are something that we see a lot of and can take advantage of, as well as holding companies, whether they be pharmacist professional corporations or other types of holding companies that also can be used in a very tax efficient manner. There is another strategy called a sidecar company, which is similar to holding company, but has different attributes and different kind of limitations. As an associate who is not an owner, you are limited in your options when it comes to tax strategies, and usually owners will have more strategies available to them as a result of having that kind of ownership. It's something that everyone's different. Many times you get someone who says, well, a friend of mine, is saving all this, or a friend of mine's paying all that, or a friend of mine has this structure or that structure. But really, it's very, very specific, and these kind of things are less general. And we like to meet with our clients, sort of discuss the different strategies available to them, but definitely countless different kind of strategies and options that are available, and each is looked at on a case by case basis.
Makes sense, of course. Yeah. So again, important to, figure out what you need and also talk to your team. I'm talking to the audience here for this. Talk to your team in terms of what works for your situation and circumstances, right?
Definitely. And many of them, and many of the strategies are not, short term, or something that's, very something that's specific, doesn't look at exterior items. So when, especially having a lawyer on the call and a banker on the call, many of these strategies will look at different ways to use financing that can help in tax efficient manners. Similarly with, you have the lawyer who's going to say which way things can be structured from a legal aspect, what that means to different stakeholders. All these things have to come together and be part of the full strategy. So, we always say saving tax today can result in costing more tax or be less efficient in the future. And it depends on what your short-term, medium, long-term goals are, and what we're trying to achieve. So definitely like to have the full rounded team be involved to be able to make the best decisions. But definitely there are lots of different strategies. Say the world is your oyster. There are endless different strategies and structures that can be used to achieve, most, if not all, your goals.
Great, thank you. Speaking of different structures, I think this came up a couple of times. Mina mentioned it a few times, but maybe we can kind of elaborate a little bit more. So what do pharmacists need to know about financing and acquisitions with other partners? Because it's been mentioned a few times and how that works. This might be a question for Mina. We mentioned shareholder agreements, and I think you touched on it earlier, what an asset purchase is versus a share purchase. Yep. Can we elaborate on that a little bit?
Sure. So the main difference between an asset purchase and a share purchase is the following. So in an asset deal, your corporation buys the business assets such as inventory, equipment, goodwill, and taking over the lease, but you're not buying the legal entity that owns them. By contrast, in a share purchase, you're buying the corporation itself. That includes its assets, its liabilities, and its regulatory history. Share deals are typically more complex and may be used when the seller wants to preserve licenses, relationships, or tax treatment. Now, considerations to take into mind with respect to acquiring with a partner. Entering into a pharmacy partnership can be a very smart way to share capital, skills, and responsibilities, but it does need to be structured carefully from a legal perspective. Starting with a shareholder, in my opinion as a lawyer, is non-negotiable. The shareholder agreement itself sets the rules of the relationship between yourself and your partner, and will include the following. So ownership percentages and capital contributions made by each partner, how major decisions are made, what happens if someone wants out, passes away, or becomes disabled, and how disputes will be resolved. mediation, or buyout mechanisms, things of that nature. Without a shareholder agreement in place, even a minor disagreement can escalate into a very costly legal battle. So you and your partner should agree in writing on the following things. Who is providing financing, or who is providing a shareholder loan to the corporation? Who will be personally guaranteeing the loan from the bank? How profits will be shared, and whether compensation reflects involvement. So active partners versus silent partners. Don't ever assume that things will work themselves out. A lack of clarity is one of the top reasons that partnerships fall apart. So it's really, really important to clarify everything, both roles and finances, from the outset of your partnership. Other considerations to take into mind would be who handles your day-to-day operations, who will act as your designated manager, will there be a non-compete or confidentiality clause in the event that a partner leaves? These are all things to take into consideration. And remember, depending on your province, regulators may require disclosure of all shareholders and approve your structure in advance. So a successful pharmacy partnership comes down to clear expectations and proper documentation. Start with the right legal agreements, and you'll avoid most of the pitfalls that derail even the best intentioned ventures between partners.
Thanks so much, Mina. Building on that, and something I actually forgot to ask Riaz earlier, in terms of, because you mentioned the partnership as well too, but I think Mina, Riaz, do you have to have previous ownership experience in order to secure a loan from a bank, or is the partnership the way to go kind of initially, and then being able to then go out fully on your own?
Yeah, definitely. When banks make a decision, or in terms of financing, we do look at the experience of the borrower, how long they have been working in the industry, what kind of experience they have they run any business in the past or not, and especially how long they have been registered, and is their licenses in good standing with the college. We do look at all these facts, and going in a partnership is another way. By that, you know there is always a backup available. But if you want to go solo, then there's no restriction as long as you have a valid license, you have been in the industry for some time now, and you feel you're ready, then bank will fully support that. And I will echo the points Mina bring up, very good points in terms of the partnerships. Shareholder agreement, we cannot emphasize enough, because more and more banks are now requiring that document for all the right reasons, because if something happens, then that is the agreement that they have to follow, right? So banks are making mandatory in most of the cases to have a shareholder agreement if there is any partnership involved. And definitely when it comes down to the share purchase agreement or asset purchase agreement, we also look at the non-solicitation and non-competition clauses. We do emphasize the client that they include such clauses into their purchase and sale agreement to avoid any future conflict. So these are very great points Mina brought up, and we definitely, as a banker, we do require such documents.
Thank you. And kind of on a related question in terms of having the experience. So we talked a lot about buying existing pharmacy and shareholders, but what about what's the difference between buying an existing one and actually starting a new one? Do the banks look at those differently?
Do you want me to answer this, or is this?
Or whoever is, yeah.
Yeah. So in terms of financing, of course, when you are starting your own financing, there is no cash flow from the beginning, right? You have to build the clientele, right? And that is why the very first 2 years are very critical. That's when you are actually going into the market and telling that you are open for the business, and you advertise a lot, and then you want all of those clients to come back, right? You want a repeat business. So cash flow is definitely a big consideration when it comes down to the startup pharmacy, and that is why we encourage our clients to have some backup cash flow, right? Even though most of the banks do finance up to 100%, and when it comes down to the leasehold improvement work, or an equipment, but I highly encourage my clients to plan ahead and save some funds, even though you may not require that right away, but you never know. With so many expenses, when you open the doors to the public, you have to pay the utility bills, you have to pay your staff members, right? Especially the initial cost could be significantly higher. Now you're signing up for all these services and you have to pay some deposits, right? For example, a rent, you have to pay first and last month rent. So for all these other expenses which may not be eligible for financing purposes, you have to have your own funds saved for all these purposes. So cash flow is definitely one big consideration when it comes down to the startup pharmacy. But in terms of acquisition of an existing pharmacy, you are actually buying a cash flow that pharmacy is generating, right? And this is how we actually make a decision. Like, does this make sense to pay such and such amount to buy this pharmacy, right? What is the cash flow of this pharmacy? What will happen after you acquire this pharmacy? Will there be any changes in the cash flow, right? So we analyze all that information when we request the vendor financial statements, that's the history, and then we ask for any normalized financial statements, like what impact will this pharmacy have after, let's say, if you own this pharmacy, what is going to happen? And then we also ask same time for the financial projections, that what things you are going to do differently. If you are telling us going forward you can increase the revenues of the pharmacy, how you're going to increase that revenue, that is your opportunity to tell us. So that's big. I would say one big differentiator is the cash flow.
Thank
And
you.
I can jump in
yep.
as well, Kathy, from the legal side as well. From our perspective, when you're acquiring an existing pharmacy, you're essentially purchasing a turnkey business, which already has established patient base, revenue and cash flow, staff and operational systems that are already in place, and a known location, often with goodwill tied to it. But there are risks in acquiring an existing pharmacy. So in a share purchase, for example, you may be inheriting existing liabilities. That includes employment issues, lease obligations, or even regulatory concerns. And also, when acquiring an existing pharmacy, the purchase price would typically include goodwill, which really needs to be carefully assessed and validated. So in doing so, you'll need to conduct more thorough due diligence, both legally and financially, to ensure you're not overpaying or buying hidden problems. On the flip side, when you're opening a pharmacy from scratch, the benefits are you have full control from day one. So you choose location, branding, layout. You build your own team, and you basically build your own patient experience. There's no liability issues or contracts to clean up. However, the trade-off is time. So you'll have no immediate cash flow. It may take, like Riaz said, it may take months or longer to break even. And you will also need to secure a lease, set up licensing, building infrastructure, and developing referral sources with doctors. So financing can be harder, in my experience, without historical performance to show financial institutions. So in short, buying a existing pharmacy offers you speed and revenue, but it does come with baggage. And building a new pharmacy gives you control and a clean slate, but it does take longer to become profitable. So there's no real one size fits all answer. It really depends on your financial readiness, your risk tolerance, and your long-term goals. So like we said earlier, a proper legal and financial team can definitely help you evaluate which path is the right one for you.
Thank you. That's helpful. I think we have gone through our questions that we wanted to answer during this webinar, but I see there's some here in the Q&A. So let's kind of get to that first. First one's about cash flow. How much cash flow should you set aside for pharmacy operations? Is this something that can be answered, or is it too broad?
I mean, just to chime in, I usually tell my clients that they should have up to a month of cash flow set aside. So you want to be able to, some people may say that's a bit conservative, half a month, but you have payroll obligations. You have, depending on which month it may be, you may have specific filings that need to be paid, as well as your suppliers. So you just say you should be comfortable with about a month set aside.
Thank you. Next question. Can you mention the name of the professionals we need to find or deal with when thinking of opening a new pharmacy? For example, I go to my bank. Who should I look for? Is it the financial advisor can help, or are there more specialized people when it comes to opening a pharmacy? Also, what type of lawyer who can help?
Riaz, I think you're muted.
Thank you very much. Sorry about that. Yeah, for financing, I would recommend when you even walk into a branch, ask for a specialist, whichever bank it is. There are most of the time there are specialists who deals with professionals like you. I would ask for a specialist and then ask them to refer. There may be a branch that they have an in-house specialist, or they may be able to maybe refer to a team of professionals. Like in Scotiabank, we work out of a professional banking center and we deal with professionals. So if you walk into a Scotiabank branch, they are going to refer you to us, to one of us. And now to Mina, maybe you can answer
Yeah,
the question.
specifically the type of lawyer that can help with pharmacy acquisitions. You definitely want to have a corporate lawyer that specializes in pharmacy acquisitions and sales. I mean, not every lawyer is well versed in this specific niche, so it is very important to ensure that they do have the experience in handling these types of transactions.
Thank you. Next question. A related question to the topic. I'm a designated manager and my pharmacy just got sold. The new owners are asking if I'd like to go incorporated versus being an employee. Is it advantageous for me to do this, or would I be giving up too much of my employee benefits, vacation, drug plan, etc.? And does that affect Canada Pension in future too much, since I won't be contributing anymore? Or will tax advantages outweigh all of this?
I'm assuming that's posed to me.
Yeah, I think, yeah.
Unfortunately, that's something that can't really be answered, specifically in general. That's a very, very specific question that has to be looked at on many levels. So I would suggest you speak to a professional.
Yeah, I would second Robert's opinion there. I think given the nature of the question, maybe it would be prudent to reach out to an employment lawyer and maybe get some consultation from an employment lawyer regarding your matters.
Mm-hmm. Thank you. Next question. How much money do we need to save up before starting a pharmacy? Is that something Riaz can answer?
Yes, I can. It depends. So I would say as much as you can, but bank will tell you that they can finance up to 100%, but there are so many unrelated expenses like which we cannot finance. So you definitely need those savings, but you don't want to just sit there and just save money. I would recommend get in touch with your advisor early in the stage. If you're planning down the road, let's say even 2 or 3 years, get in touch with your advisor, ask them like, and see like if you are starting a pharmacy, what are the potential costs, right? Especially now these days, the cost of goods have gone so high that you can really guess that, right? So certain things I would maybe add here. For example, when you are thinking to start a pharmacy, I would recommend to get as many quotes as you can. And once you finalize a contractor who is going to do the leasehold improvement work or construction work for you, I highly recommend, and bank will ask for that document, to have a fixed cost contract in place, which is signed with the detailed list of job they're going to do for you. And based on that document, you're going to know that I will need this much of money to complete my construction. And then you can go to your bank and ask them how much they can finance. And if there is any difference, any gap, then you have to come up with that kind of money from your pocket. So I would say any money is good, but that's why planning and preparation is the key. It could vary, right? It could vary on the scale of the pharmacy you're planning to open or you're planning to acquire, right? So it all depends, and it is relative to your own plan.
And just to chime in, there's something called opportunity cost as well, which is what else could you be doing with that same money? So you definitely have to weigh, as Riaz says, what the financing requirement is in terms of how much you need, how much of your own money needs to go in, as well as how much you can borrow, to weigh the cost of the interest on borrowing more or less, but as well keeping in mind there is tax deductibility to that interest in both cases, and as well what can that same money earn if it was used or deployed elsewhere. So a lot to consider with that question.
Yeah.
Thank you. Next question. Still have quite a number here, so I'll try to get through it. Riaz mentioned having a certain amount of time or years of experience practicing as a pharmacist before being considered for a loan. How many years of experience on average would you say are preferred before applying for a loan?
I would say there's no right or wrong answer. Like if you're registered with the college and you have graduated, you have registered with the college and you have been practicing, I would say like you can start as early as you think you are ready, right? The important thing is that if you feel you're ready and you can run your own business, then bank is not going to say no to that, because you have the license, you have been working for a few months or a year or 2 years, and depending if you're ready, for example, if you have saved up your money, right, you can demonstrate to the bank that you have the ability to run the business. You have a certain amount saved up in case you need extra cash flow. It is available. And depending on your project, if you're starting a business and you don't need much in terms of financing, yeah, then bank is not going to say no to that. So it comes down to your preparation. Whenever you feel you're ready and you can operate your own business, sometimes running your own business is different than working for someone else. So you have to have that kind of mentality, and you have to be prepared that yes, I can run my own shop, kind of thing. So bank is not going to restrict with someone who has like 1 or 2 years experience on like 5 or 6 years. Bank is not going to stop them to come to us and ask for financing.
Thank you. As you kind of pointed out earlier, those documents that the bank look at, your business plan, that's all part of you being prepared. And if you feel that you're ready and are
Of
able
course,
to come up
of
with
course.
a sound
And
business
that's
plan.
why I emphasize very much on that document, that it should be a live document where you have actually prepared that, you have done your studies, you have looked at the demographics of the area, you know exactly how you're going to do the marketing for the pharmacy, right? And who is going to run the shop. If you are the only one who is going to operate, then what other support staff you will require, and do you have the finances to do all that, or do you have the resources to run that business? Then yes, you that's how you feel that you're ready, right?
Thank you.
Yeah.
Next question. This might be a little broad, but what will be the next steps to be taken when you are buying or offered equity in an existing business?
Okay, I think I can touch on this, Kathy. So, whether you're buying shares or being offered equity in existing pharmacy, from the top of my head, there are some critical steps that you would need to follow. So, one would be understanding the nature of the offer. So, are you being offered new shares? Are you buying existing shares from another owner? Are you getting a controlling interest, or are you coming in as a minority partner? Each scenario kind of differs in terms of rights, responsibilities, and risks. So the legal approach will vary according to the nature of the offer itself. Another consideration would be conducting your legal and financial due diligence. So reviewing the health of the business, including financials, tax returns, debts, cash flow, existing liabilities, the legal structure itself. So the corporation documents, the bylaws, the minute book, the regulatory status of the pharmacy itself with the college, any existing contracts, leases, employment agreements, third-party agreements, as well as shareholder disputes or lawsuits. So if you are buying into the business, you need full visibility into what you're joining. And also, in doing so, you would be a party to a shareholder agreement, ideally as well. Off the top of my head, other considerations to take into account would be working with your accountant to confirm the valuation and the purchase price, you know, reviewing how the business was valued, confirming what you're paying in exchange for equity, clarifying whether you're entitled to dividends or voting rights or management input. And then also discussing with your CPA the tax implications, whether you'll be personally holding the shares or is it going to be through a corporation. So depending on the situation itself, there's a number of legal avenues that that this could go through, but those would be the top considerations to take into mind when making that decision.
Yeah, just to chime in, you know, I mean, you have the right three people here, but you always got to look at the legal, the accounting, and the financing. You know, how are you going to pay for it? What does it bind you legally, and what happens on a tax and monetary effect? So those are all things that have to be considered.
Yeah, I will add to that. Great points from Mina and Robert. And we do look at the financing for buying into the shares. We do help such clients as well, but definitely you have to do your due diligence first on your legal side and also on the accounting side. And once you determine, yes, this is something you're really interested in, definitely approach your banker, and that's something they can really look into that.
Yeah. Okay, not much time left, so I'll try to get through the next few questions, but I think this next one was touched on, but maybe we can clarify again. Is it mandatory to acquire the existing staff when acquiring an existing pharmacy? I think that's for you, Mina.
Yeah, so it's not really a quick answer. It really depends on the structure of the deal. And it's a really important distinction from a legal standpoint. So if you are buying the shares of a corporation, yes, in most cases, employment relationship automatically continues. That's because the legal entity itself is staying the same, only the ownership changes. So staff remain employed under the same conditions. You can't really terminate or change roles without running the risk of a wrongful dismissal claim. And then any prior obligations like vacation, seniority, or entitlements carry forward. So unless you've negotiated otherwise before closing, you are inheriting the full employment picture on a share purchase. Now, if you are buying the assets of the pharmacy, legally, you are not required to take on the staff because you're setting up a new corporation that's purchasing selected assets. There are practical considerations to take into effect. So keeping staff can really help with business continuity, especially if they know the patients, they know the systems, they know the workflows. In some cases, the seller may make continued employment a condition of the sale. It really depends. I have seen that before. And then if you do hire staff, they may be considered continuously employed under employment standards legislation. So you still need to be cautious. So to summarize, no, it's not always legally mandatory to retain staff, but the risk and impact of not doing so depends heavily on the deal structure and how you handle the transaction.
Thank you. It's helpful. Next question, it's kind of one question someone added to it, so I'll just read both. How do you evaluate a pharmacy? Is 5 times of net income still a right number? Maybe that number was thrown around in the past. Follow-up question somebody else has is EBITDA times 8 aggressive? Major corporate firms are willing to pay that much, but what is the average?
Yeah, so as a banker, I have seen a range from 5 times to 8 times. It depends what kind of pharmacy you're buying, and it also depends on multiple factors. There is no yes or no that if it is 7 times EBITDA, we will not entertain that, or if it is 5 times EBITDA, we will be able to arrange the financing. There are multiple factors we look at. Yes, the EBITDA is one of them, but there is a reason maybe somebody is willing to pay 8 times of that EBITDA. What is that reason, right? We need to understand that. So it is very unique to each and individual transactions. For some, we may be able to do the financing or arrange the financing for 7 times multiplier. For some, we have to say no to even 5.5 times multiplier, right? So, but we know as a banker, we are aware what is out there in the competition in the market. And we see a range of 5 times EBITDA to 8 times EBITDA, but it all comes down to the individual pharmacy you're buying. And what are the factors? What if someone is willing to pay higher EBITDA or a lower EBITDA, right? So it all depends on multiple factors.
Okay, thank you. I'm just looking at the time. Our time's up. I don't know if anybody had some. I'm just looking through the questions here. Some of them are were already answered earlier. But there is one that I find is a bit interesting here in terms of what happens in cases of business failure or loan default. Kind of looking at it differently. Maybe we can answer that question and then kind of wrap up the webinar here.
So, so I'll maybe go first for something like that. We bank always secure your personal guarantee, and now these days all the banks are asking for unlimited personal guarantees. That means then you will be personally liable to pay that loan off. If the business somehow cannot support the payments, then it will be you who will be responsible, right? So that is why that is one of the consideration you should think when you are thinking to jump into a business. Like, are you ready to take that risk? And that's why having a strong plan, a business plan in place, and a well thought of plan in place, that what will happen in case things go south. So but yes, you will be personally responsible if the business cannot support the payments. That's on the banking side. So maybe if Meena, you want to add something to this?
Yeah, I mean, as Riaz said, most banks are seeking unlimited personal guarantees. So in the event the business does fail, it's very important that your business plan has some sort of continuity plan in the event that that does happen, because like Riaz said, banks will likely be coming after you personally in repayment of the debt.
Thank you. Just basically run out of time, but thank you all for being so engaged in this webinar. And I want to thank you, Robert, Riaz, and Meena, for taking the time today to talk to us. Really interesting topic, and obviously there's lots of questions. I want to kind of emphasize what Meena mentioned in the beginning. It's important to talk to your, find the right people for yourself and for some of these questions, especially if you have very specific scenarios. But also, Meena, if you wanted to throw in your contact into the chat, who has offered free 30-minute consult for those who are attending tonight's webinar. Thank you so much. And I do want to thank Scotiabank again for supporting this webinar. And thank you again, panelists, for taking the time to talk to us today about this. And for those on the line, please fill in the evaluation report or evaluation survey. When you're done, we really review all the surveys and constantly kind of adjust our programming to make sure it meets your needs. So we'd love to hear some feedback from you as well.